Hello and welcome to an emergency summit of our best economic advisors here at UnHerd. It's a morning of tumult in the financial markets. We're into the third day of aggressive sell-offs across the world. The Hong Kong and Taiwan indices were down double digits this morning. The FTSE opened down around 5 or 6%. It looks like the American markets, when they open, will also be very seriously down. It's the third day in a row as pretty much everyone around the world is scratching their head and trying to get to grips with what the impact of these extraordinary, very high tariffs announced by the Trump administration will be. Does it point to a whole new economic order? Is it, as Keir Starmer said, the end of the era of globalisation? We are joined by UnHerd's very own Wolfgang Munchau, whose Monday morning column each week has become an absolute must-read as we watch these economic shocks taking place, and also Anatole Kaletsky, whose piece this morning on his own Gavekal economic advisory service was absolutely fascinating. Welcome to you both. Wolfgang, can I start with you? You put in your piece at UnHerd this morning that you thought this past week was one of those big moments in economic history, up there with 1944 and 1971. That would be the Bretton Woods summit and the so-called Nixon shock of 1971. Put it into context for us. What do you think is happening right now?
I mean, what's happening on the markets is that investors, for the first time, realize it's for real. Trump has been saying these things for a long time. But during his first term, his tariff threats were not, he didn't really take them up. He did a few, but there was nothing serious. When he campaigned on them, they didn't believe him. When he threatened them, even on his inauguration day, the tariffs, the reciprocal tariffs that came soon later, the announcement that came soon later, the steel tariffs, the car tariffs, all the stuff with Canada and Mexico, people hadn't kind of clicked onto this, that this is a bigger story. I'm not saying this is going to succeed or work, and I have my big doubts that it will. But I think people are realizing that Trump is serious about what he's doing. He has implemented this stuff. He's overridden the views of his advisors. I think that was also a big story, because a lot of the reason why Wall Street didn't act before, they talked to the wrong people in the White House. They talked to people in the White House who told them, listen, it's not going to be as bad as it looks. And, we have different options for him. No decision has been made. So we will triangulate this. That didn't happen. It was the Trump version, the raw, unfiltered version, the one that didn't have the fingerprints of Scott Bessent and the fingerprints of Stephen Moran on it. It is basically the Trump, the campaign version, and some else, because, the 20% universal tariffs on the EU, that was more than what he threatened during the campaign. I think at the time we were talking about 10%. But, broadly, this is what he threatened. And the markets realize this now, and have it took them a few days to realize how serious this is. This isn't just a trade policy. This is really the end or the upending of a system, of a global monetary system, and a version of the system. And we've been in a dollar-centric world since 1944, but this is the end bit of this system. We've had different, dollar was tied to gold, and then we had various arrangements in between. But this is the sort of the modern open macroeconomic version, where we had free floating exchange rates, free capital movements, a massive dislocations of trade. And this period is now coming to an end for political reasons. And, we had a forerunner of this with Brexit, a small, almost, it was like history. It's the other way around of the way Marx put it. This is like history started with a bit of a farce and is now turning serious. And that's sort of the situation in which we're in. This is the end of the hyperglobalization period that lasted from about 1990 to around this time. Interestingly, when I first met Anatole, this was basically around the time of the Eurozone crisis. Not the Eurozone, the sterling crisis, the exchange rate mechanisms crisis. We both worked on the Times. It was there was already a sense of something ending at the time. And obviously that was, I always thought of that as the beginning of Brexit. That was sort of a very early start of it. But it's sort of, these are big moments and have often not entirely understood consequences. I'm not claiming that I understand them in full.
Anatole, would you agree with that? Do you think that this era of hyperglobalization is now over?
Yes, I do. I agree with everything that Wolfgang said, in the sense that I think this is a huge, tectonic change in the whole global economic system, in very much the way that he describes. But I don't think that that is the issue that is really roiling the markets at the moment. So if we want to talk about the long-term changes in the global economy, that is one conversation. And it's a very important and interesting one, and the one that I think that Wolfgang suggested. But if we want to focus on what is happening to the financial markets right now from day to day, but also crucially, what I think is going to drive economic activity and the real concerns of citizens in the world economy, not over the next 10 years, but over the next 6 to 12 months, then I think the issue is completely different. And I'll come to that in a minute. And one of the things that really worries me about the present market situation is that almost everybody in positions of authority or even decision making in businesses and financial institutions are concerned with the long-term issues that Wolfgang has rightly touched on, but actually what is going to drive the world economy either into a recession or even into a deep depression like the one we saw in 2008 and briefly during the COVID period, is not anything to do with this kind of long-term structural shift in global trade. It's actually something much simpler. What it is that the tariffs that Trump is imposing now, which are way beyond what anybody outside the White House, and actually, as Wolfgang said, even what most people inside the White House thought were plausible, actually are going to amount to the largest tax increase on American consumers and businesses, certainly since the 1960s, and quite possibly since the Second World War. And that tax increase is going to hit the US economy very, very hard indeed, making a recession, the recession that everybody wrongly talked about over the last 3 years. And I was constantly pushing back in the last 3 years against all these expectations of US recession, which we had at the beginning of 22, 23, and 24. That recession is now going to happen, not because of the long-term changes in the structure of global trade, which is something that will evolve over many years or decades, but simply because Trump has inadvertently hit the US economy and US consumers in particular with this enormous tax increase. Now, the reason I think that that's really important for the rest of the world is that there's, I think, almost certainly going to be a recession in the US. But that's something that can be tolerated, and business cycles come and go. But if that recession spreads around the world and metastasizes, as I said in my piece this morning, into a global recession, it could really become something comparable, perhaps not on the same scale, as the 2008 slump, if not the 1930s slump. And it's really up to the other countries in the world, particularly the leadership in China and in the European Union and Germany, to ensure that the recession which Trump has now inflicted on the US does not spread around the world. And what worries me is that all those policymakers are focusing on the wrong issue. They're thinking about how can we retaliate? How can we, respond to this long-term change in the structure of global trade? Whereas what they should be focusing on is simply this. How can we ensure that our domestic demand in our economy is re-stimulated sufficiently to compensate for the loss of exports, which we're undoubtedly going to suffer over the next 6 to 12 months to the United States. And if they don't change that focus quickly, we'll be in real trouble. And I think that's what the markets are really picking up in the last few days.
So I think that's a useful division. Let's start the first part of this conversation thinking about the short term, and then let's get to the structural long term, because I think it's useful to separate them as you have done. Wolfgang, do you agree with that from Anatole, that basically some kind of massive stimulus is the correct response for other Western or other governments in general to these tariffs? Is that what you'd like to see in Europe and in Britain?
In principle, yes. Where I would start is, and I think Anatole is completely right on this point, there are not many people who actually say this. First, you stop banging your head against the wall. First, we're not going to impose the tariffs because that's what we're planning to do. And we basically repeat the same mistake, except that we're in a weaker position than that. We're not going to win we're the surplus people. We're not going to win a trade war on tariffs. This is a hopeless, futile thing. The only time you'd ever do this is if you have a realistic chance of winning a trade war. And this is not the case here. So the Europeans and the Asians should stop this. The second
thing. So in
other
words, just to be clear, the Chinese made a mistake.
Yes, I think so, completely.
In imposing retaliatory
That's right.
tariffs.
It was more of a symbolic thing because they're not importing much from the United States.
Yeah.
But it's not like, I'm not worried about this particular decision. But what I worry about is that others say, well, let's do that too. Now let's fight the guy. And so the instinct, especially the instinct in Brussels, because they have the instruments. This is the thing, the way Brussels works, because they have the instruments. They have these coercion instruments, and what they have all these marketing names, and they have them available. And obviously, what's the point of an instrument if you don't use it? No? And so
You're worried that Europe might follow China's lead and
I think so. I think they might, or at least they might try, and they might go this. This is the first thing. The second thing I would do is I would announce a free trade agreement, a multilateral free trade agreement between the UK and the EU and Canada and Australia and whoever wants to join it. So to offset some of these motions, I find it, the EU in particular should now, and the UK should go back together. I'm not talking about reversing or Brexit. I'm talking about trade, the stuff we need to do in the next 6 months, and basically say let's open up this trade agreement. Let's give people an expectation that things will ease up. And yes, third, I agree. They should. The Europeans are already doing this. The Germans have finally, after like 15 years, given up on their horrendously tight debt rule. They haven't reformed it well, but at least the strictures are gone. So there's going to be an increase in fiscal spending in Europe, and that's going in the right direction. And the central bank will no doubt support whatever the governments will do, as they must, because we have a very different environment. Now, the oil price is falling, and a lot of things are changing. So I think so for the ECB to support this process would actually make sense. I've been pretty much a hawk on monetary policy for the last few years because I saw the inflation, I saw what it did to politics.
So this is another very confusing thing to us civilians and armchair observers, the fact that prices seem to be coming down rather than up so far in response to these tariffs. But just on your previous point, just so we're completely clear, it sounds like there's a kind of fork in the road for Europe, the UK, Canada, other Western economies. Either you go tariff meets tariff, or you do a kind of turn the other cheek approach and say, actually, we're going to respond by going even more free market. We're going to try and do free trade deals with our other economies and sort of form a free trade bloc that excludes America. Is that what you're suggesting?
That's what I'm suggesting. Absolutely.
Yeah. And that would not be turning the other cheek, incidentally. That would actually be, in terms of trade policy, the most effective and in some ways actually the most aggressive way of retaliating against the US would not be to say, oh, well, we're going to close ourselves off, from buying US goods. And actually, there aren't that many US goods anyway that could be deterred through tariffs anyway. It would actually be to say, well, if the US doesn't want to be part of the global trading system, fine, we can survive perfectly well and we can thrive and prosper, not just well, but better than we have in the past in a global free trade, in a global trading system that excludes the US. And if the US wants to, it can make the very long-term choice that Argentina made back in the early 20th century, when it was actually one of the richest countries in the world, and go for autarky, protectionism, isolating itself from the rest of the world. And let's see what that does to American exceptionalism, competitiveness, technology, and so on. Yeah, but I still think that that's not the most immediate and urgent issue, which is simply how do we avoid having a global depression? That's what really happened. In the 1930s, a lot of people get their history wrong. They say, oh, well, it was the so-called Smoot-Hawley tariffs, the US tariffs imposed in the 1930s that caused or really aggravated the Great Depression in the 1930s. They did aggravate the Great Depression, but largely because the response to those tariffs in the US was a retaliatory trade war response with other countries putting on their tariffs instead of what it should have been, which would have been a demand stimulus by the rest of the world. So the world was operating in a very deflationary environment, as Europe has been until very recently. As Wolfgang said, there's a chance that Germany is now changing. But what we really need to do is really turbocharge that change from a deflationary to an expansionary domestic economy, both in Europe and, just as importantly, in China. And once that happens, that's when we can start thinking about the long-term issues of how do we restructure global trade to exclude America.
There's this kind of two-phase response then that we're looking for. We want this is the kind of Kaletsky Munchau prescription. We've got a short-term stimulus of some kind, which is going to be politically controversial because it means more borrowing, I suppose, and more possibly government propping up of industries and businesses, which feels like it was a symptom of the 2008 response and the malaise that followed. So, just respond to that, because that troubles me, the idea that we'd just be doing the same thing we tried to do in 2008, borrow loads of money to try and cover over the cracks. Is that really a good idea, Wolfgang?
What I would emphasize, fiscal stimulus isn't about what we did in 2008. 2008 was a massive monetary stimulus, and in large parts of the rest of the world, it was a fiscal contraction, like in Europe and also in the UK. I think that would probably be the wrong response, and not the right response right now, because we don't have the deflationary environment that we have. We may have one, but I don't think we will. What I would do if I was Europe and I was sort of the leader of one of the large European countries, which it's not going to happen, but if I would see this as an opportunity to say, look, we're going to do this. On a national level, we can't do this really. We can borrow a bit more, but we can launch European bonds. We can actually launch European Treasury bonds. We can make an announcement. That's what I would do. I would make an announcement saying that America has taken a democratic choice. We respect that choice, and this is now for us to fill the void and for us to take leadership, global leadership. We will promote the euro to become a global currency. That requires infrastructure, which we don't have, like we don't have a treasury bond in Europe. We don't have a capital market. These things will need to be created. It will need to be a reboot of how the EU works, and would certainly need a degree of centralization that people have rejected politically. But that would make a huge difference, and then have multilateral trading agreement. So the idea of the stimulus isn't really to go into debt, because Europe has a debt problem. I completely acknowledge that. Some countries are at the limit of their fiscal abilities. I don't think Italy can do anything unilaterally, or nor can France. Germany has a bit more space, but the real big space in Europe is at the European level. If you create a layer of sovereignty at the EU level, it could fill the gap. It could do the short-term stimulus that is needed, and it could be invested in defense. You would then have the medium, long-term structure to fix the system.
Absolutely right, Wolfgang. I vote for you for the job that you say you can't get, which is as European leader. No, I think that's absolutely right. The only point on which I disagree slightly is that Germany doesn't have a little fiscal space. It has a lot of fiscal space. But you're also absolutely right that the mere announcement of something along these lines would have a big positive effect on certainly on financial markets. It would probably turn around the stock market collapse that we're seeing minute to minute today, and it would have a very important effect on business confidence, investment, and consumption in Europe. And I think between them, those financial and confidence effects would be easily sufficient to offset the actually quite modest hit that Europe as a whole will suffer as a result of the loss of, let's say, 10 or 15% of its exports to the US.
Okay, I hate to be a kind of nationalist here, but what about the UK? I mean, we have been celebrating, if that seems possible on these kind of days, the fact that we were hit with the 10% as opposed to 20% because we're no longer in the European Union. Is there anything that the UK can do? I mean, sterling used to be a currency that people took seriously. Is there any chance that the UK can take advantage of its kind of halfway house position?
Well, I think the first thing that the UK should do, along the same lines I was discussing, and there was a hint of this for the first time over the weekend, is they have to reconsider the so-called fiscal rules and the kind of downward spiral that Rachel Reeves has got herself into, actually now almost uniquely among the advanced economies. The UK still has this Germanic totem of a debt brake, the equivalent of a debt brake, which what it does is it guarantees that if the global economic situation deteriorates, which it now has, then the UK will be forced to actually magnify that deterioration on the domestic economy by raising taxes and cutting spending. So, already by Friday, everybody was saying because of the fiscal rules. Now, what they have to do is say the world has changed and the fiscal rules, we know we only put them into place 6 months ago, but they also have to change. We also have to be part of this more expansionary approach. That's the number one thing. But the second thing, as Wolfgang said earlier, is you can celebrate all you want about the tariff of only 10% rather than 20%. It is still going to be a huge impediment to the continuation of British exports into the UK, into the US economy, as we've seen with Jaguar Land Rover and so on. And so what the UK has to do is the next step is we have to be part of this global realignment of trade relations, which involves actually a reintegration into the European economy, not by rejoining the EU, but by having a really much more wide-ranging and comprehensive renegotiation of the trade and economic relations with Europe than anything Starmer's talked about, and then moving that globally and trying to embrace China and Asia as well.
One way that might be more politically palatable is if it's not just the EU. And as Wolfgang mentioned there, people have been talking about CANZUK. This is the Canada, Australia, New Zealand kind of groupings. There have been various, at the time they felt very eccentric, the idea that there would be any new groupings outside the EU. But do you think we might see that now, that something like kind of EU++, involving Canada, the UK, maybe Australia, maybe other allies, maybe that might now form?
I think that's conceivable. I think, Canada has there have been rumors of the idea of Canada joining some kind of association agreement with the EU. And of course, as you say, and this is not something that hadn't really occurred to me before, that Canada joining an EU association agreement would be a wonderful cover for the UK, including some of the most extreme Brexiteers, to say, well, if it's good enough for Canada and Australia, maybe it's good enough for the UK as well. So I think that is a path that's worth exploring.
I mean, it would be sort of a new G, G with some number behind it. Not exactly G7, but the G7, the old G7 is sort of dysfunctional now with the US taking on the role. So it would be a regrouping. So it would be the EU and other countries. So that would make perfect sense. And it's not a membership of the EU. We have to be very clear about this. The EU is a member of that. And maybe its member states would be members of it as well. And the UK and Canada, there could be several countries. And the goal would be mostly focused on trade. And I would also include macroeconomic coordination about this, because we're going to move to a world that will be macroeconomically more coordinated than the last 30 years. So this won't be this world of benign neglect of free currency movement, free capital movement. There will be a lot of stuff happening. And I think it will require more active coordination of the kind we had in the 70s and 80s. These were the decades of very active currency. You remember the Plaza Accord, later the Louvre Accord. There were lots of accords and lots of sort of benign nudging of what was already becoming a free-floating, a very open economy type of system, but it had a lot of seething troubles in those decades. And I think we're entering we're not going back to Bretton Woods, certainly not to the gold standard, but we're certainly entering a new phase, and these coordination mechanisms would be extremely valuable. And that would be my main policy recommendation right now in terms of international, financial diplomacy. That's the first step that I would take.
Can I ask, in your piece at UnHerd this morning, Wolfgang, you were talking about how you felt that the devaluation of the dollar was actually a core objective of the Trump White House, and that although there's lots of these tariffs are the visible part, what they're really hoping for is for the dollar to devalue. Tell us a bit more about that. It doesn't seem to be happening very dramatically, at least. Tell us what you've been studying the papers of Stephen Miran, who's chairman of the Council of Economic Advisors, a kind of, a slightly more soft touch Trumpian, I suppose. Tell us about that.
That's right. He's sort of, I would say he's the brain behind the operation, but unfortunately he's not very influential, or it doesn't appear to be that influential. And he is not a tariff man. He used the tariff, and I also know Besant. Besant, thought about tariffs as sort of the gun on the table, not the thing to be triggered. So I would put Miran and Trump on a different layer. So what Miran wants, and think about a tariff. A tariff is a tax on consumers. It does two things for the US. It makes imports more expensive, but he also collects a lot of money. And that was certainly part of what Trump wanted, collecting a lot of money, hundreds of billions, possibly they talked about even higher numbers of money. A currency devaluation would have been the smarter thing for him to do, but he wouldn't have collected money. It would have made American imports more expensive, just like a tariff, but it would have made American exports cheaper. So it would have been a much more profound effect on the global trading system. If they really cared about imbalances, and I think they have a case to worry about that, if they cared about imbalances, the dollar is the tool and the tariffs would have been the supplementary tool. Now they switched this around, and now they have the tariffs, and now the question is, how do they get from here to a lower dollar, which is ultimately what I think they want. Trump, maybe not, but certainly the people around him do have. Certainly,
the dollar hasn't really shifted that much since these.
Well, it has a bit. It came against the euro. It was when Trump came to office. I was just looking at the numbers. It was about 8% down now, opposite of what people predicted. The classic economic theory would suggest that if you impose a tariff, your currency actually appreciates. And you still get people who say, "Oh, it doesn't work." That's why a lot of people didn't take it serious, because they thought it would be kind of self-defeating in the very short run. Like he put a 10% tariff, and then there would be a 10% dollar appreciation, and would undo all the effects. That didn't happen. The dollar went the other direction. There's a lot of complex stuff, and it's mostly about what Anatole says. It's the short-term fear. People are moving money out of America. That is the dominant factor. That's the reason why the dollar is weak. So ultimately, as I said in my article, Trump may get his wish. It's the question of whether it's a wish he wants to see fulfilled in the end. But I think it's happening now.
Can I ask, on the longer term question that we sort of seem to be tilting into, which way do you think it goes? Because so far the Trump sort of strategy, which is to single out individual countries and make them sort of come to him and offer their best sort of foot forward and everything, seems to have worked pretty well. They've all been acting independently. But if what you're suggesting, some version of it does happen, which is everyone teaming up and saying, enough is enough, we're now going to form some sort of Western world without America grouping, what then happens? Does that just fast forward this sort of new world where America is no longer at the center? Or do they then relent? Let's try to play that forward. What happens next, Anatole, if that takes place?
I think if that actually occurred, but unfortunately, I think it's actually very unlikely to happen. But if that happened, then I think you would get a reshaping of the global economy in which America became not just much less dominant economically and geopolitically, but also much less successful in terms of productivity, competitiveness, growth of incomes relative to the rest of the world than it has been in the past. And in a way, I think you could imagine a bit, an analogy with what happened after the Second World War, with Britain's relationship to the rest of Europe. The rest of Europe, from 1956 onwards, formed the initially just 6 members of the European coal and steel and then economic community. They expanded that into the European community, the European Union. For 20 years, the UK remained outside of that, believing that, it didn't need to get involved in this European integration. And it found the previously poorer and less productive countries of Europe catching up with and then overtaking it. And 20 years later, it wanted to rejoin that club. So I think you could imagine in theory, though I think probably not in practice, shift in the global economy where the rest of the world ex-US, restructures itself into a more integrated and better managed global system along the lines that Wolfgang was suggesting. The US would certainly under Trump, but I would say almost certainly under his successor for the next 4, 8 or 12 years would stay out of that, would say this is ridiculous, this is a joke, these are not serious countries. But if that integration effort began to show clear signs of success, ultimately, the US would probably rejoin it, or could rejoin. So one could imagine all kinds of scenarios like that. Sadly, I cannot see anything in any part of the global leadership today, whether I look at Brussels or certainly here in Britain or China, which suggests that even a step in that direction is likely, in the next year or so.
What does seem likely, though, Wolfgang, I'm going to bring you in now. What does seem likely is that the relationship with China will be affected by this.
Yes.
You can imagine, you're a great expert on Germany. They want to be better friends with China,
yes.
And China will want to be better friends with Germany. Even in the short term, do you not think this will warm up relations between people like Western European economies and China?
I don't think so. I don't think so in a fundamentally structural way. We have to remember where we are at the moment, why we are in the situation where we are. China and Germany have been running economic models. They haven't just generated surpluses. Both of these countries generating very, very large structural surpluses. And this is not just some accident. If Germany doesn't generate a surplus, that is the moment when Germany is in a recession. Germany needs the surplus, the way Germany is structured. Germany has repressed imports, has repressed consumption through fiscal policy, but through other policies as well. China, even worse. China is Germany on steroids. China is running a system of financial repression. So, the West is to a very large responsible for what is happening here. This is not just bad Americans and an innocent rest of the world. This is unsustainable stuff that happened, and this unsustainable blew up because America elected Trump. The German model, as I always say, was contingent on Trump not getting elected.
Wolfgang, do you think that European attitudes to China will be affected by this? Do you think that people will want to, look east, basically, for new powerful friends?
Yeah, this is happening to some extent. It was already happening, by the way, in the latter part of the last decade when Angela Merkel and Emmanuel Macron signed an investment deal with China that was blown apart in the European Parliament. This kind of stuff I would expect to come back. There is still an acute awareness, especially in Brussels, that China, we have to be careful in our relationship with China. We do not want to repeat the mistakes we made with Russia and we made with the United States, creating these over-dependencies. You don't want to be dependent on China for critical technologies and certainly not for critical raw materials. So there is scope and I expect this to to end this situation where, the Americans have stopped a lot of EU-China business. For example, Huawei is no longer, equipping our 5G systems, which has had enormous cost in Europe. In countries like Germany, famously, the 5G is pretty much absent from large parts of the country. It's a very poor communication system because they had bet the house on Huawei, and they had no plan B for this. And the Dutch company ASML, which is a brilliant company that produces lithography machines for the production of semiconductors, completely critical technology. The Americans have successfully got the Dutch government to stop exports of this company to China. Now, this will be more difficult to do in the future. America cannot impose tariffs on the rest of the world and persuade us to follow the doctrines of American foreign policy. So I think Europe will act gradually more in its own interests, but Europe is not very good at defining its own interests. It's usually been lagging on this point. So I share Anatole's skepticism about us getting together, and what I said about the Eurobond and the Treasury and the Capital Markets Union. This is really an idealist version of what could happen, not of what I expect to happen. I don't expect that to happen.
Anatole, do you think a pivot back to China is plausible?
Yeah. So here's something. Finally, a point where we can disagree a bit, Wolfgang and I. I think if this more benign scenario were to play out of the non-American world restructuring itself to create more prosperity, to avoid depression, and to actually create a sort of subsection of a free trade world, then a rapprochement between Europe and China would be absolutely at the root of it. And I think it is, to a certain extent, it's already beginning to happen. And I think that will, the logic of the economic logic, I think, points very much in the direction that there will be a closer collaboration between Europe and China than in the past. The downside of that from a political standpoint for many people will be that Europe will have to set aside the concerns about democracy, human rights, and so on and so forth, that have become increasingly dominant in the European relationship with China. I think, and I would welcome that actually, given that I don't live in China, given that I live in Europe, I would welcome a closer economic relationship, which leaves to one side the differences in the management and the structure of politics and so on, because apart from anything else, we're not going to change that in China. So I think that's where the logic points, and I think that is going to happen. I disagree with Wolfgang on the idea that Germany and China are intrinsically so competitive in that they have this export-led growth model that they can't work together. The reason I disagree with that is not because he's wrong. He's right about them at the moment. But I think what Trump is is forcing the rest of the world to do, and Germany in particular to do, but also China, is to move away from that export-led growth model. So, this is fundamentally the most important thing that has to happen. Germany and China both have to recognize that if they want to avoid falling into a permanent depression, a kind of long-term slump of the kind that we've seen in Japan over the last 30 years, they have to abandon their export-led growth models, and they have to start growing on the basis of domestic investment, infrastructure, technology, and consumption. They have to cut taxes rather than raising taxes. They have to expand government borrowing rather than cutting government borrowing. If they do that, then actually China and Germany can start to work together in a way that they haven't.
It's worth saying, of course, that if that does happen, the geopolitical implications could be huge, because for the last 3-5 years, we've been talking about imminent conflict. We've been talking about the sort of standoff between America and China. If Europe and China are more closely working together, how that will play out changes. We only have a certain amount of time left, so I want to hit two big themes that we haven't mentioned yet. The first is, what actually happens inside America now? Because UnHerd and Wolfgang, in your columns, we've been sympathetic, basically, to some of the underlying rationale for wanting to do something different. Because although America has thrived in this global order, there have been parts of the electorate that have suffered. It is true that there were losers as well as winners from this big globalized era. And, we have to respect their choices as voters. Donald Trump and his, regime think that what they're doing around tariffs will help those people. He thinks, obviously, that it will bring industry back in some way. There will be reshoring. There will be more manufacturing in the US. He obviously envisages that there will be economic benefits. So, Wolfgang, can I start with you? Do you think he will see those benefits?
Oh, yes, I think he will see some of these benefits. It will not necessarily mean a sort of a thriving US economy, but we already see companies are expanding their production location. I look at German industrial companies. They have been waiting. They haven't really taken any decisions so far because they wanted to know where things are going. At 20% or 25% car tariffs, there is no German company that can profitably export cars to the United States. The margins are simply not as big. And the fall in demand, if these tariffs were imposed, would be so significant. This is the largest export market. So they have no choice. Those who have factories in the United States will expand them. And those who do not have factories will be seriously considering building them. Not everyone. There is Porsche. You can't just do a Porsche thing, in America. You need, there may be only, 50 people in the world who know how to make a Porsche, and they may not be in the United States. They probably aren't in the United States. So that they will probably, could continue exporting and take the hit, and people who buy Porsches might just pay the tariffs. Same for Ferraris, but for classic cars, for normal cars, for medium-sized cars, and even limousines like Mercedes limousines, they will gradually shift over to the United States. So this is happening. Trump has already announced a number of deals, like Taiwanese semiconductor companies, Apple, various other companies have, even the French companies have already started to make announcements about investments. So this will happen. And, but one has to be realistic. This takes time. If you think about it, the way an industry works, industry are not like investors. They spent a year finding a site and trying to find suppliers. Then they build the stuff. When Elon Musk went to Germany with his Tesla factory, it took him 2 years from the moment the building started until he delivered the first car. So the whole thing would have taken at least 3 years until the first car was rolling out of the factory. And that's sort of the time frame we are looking at complex manufacturing processes, as they invariably are for cars, for chemicals, pharmaceuticals, mechanical engineering products, or pipelines, which are often very complex.
It will happen, but it's going to take a while. Anatole, I see you shaking your head there.
Can I disagree with that? I don't think there will be a lot of reindustrialization. Obviously, at the margin, there will be some new factories and so on. But your question really was about how this would affect the people of America, the citizens, the voters in America. And on that, I think there's very little chance that Trump's policy will succeed, in the sense that even if these new car factories or semiconductor factories are set up, their impact on American employment and on the wages of American workers will be marginal at best. They will have very, very small workforces. In order to make any kind of industrial manufacturing competitive, given American wages and labor costs, which are by far the highest in the world, you can only do it with extreme levels of automation and very low labor inputs. So I think the idea that there will be a resurgence in industrial employment as a result of these tariffs, I think, is a complete fantasy. What these tariffs will do is dramatically change the tax structure, and this is part of what Trump has been aiming for, from a tax structure that in America is very, very much biased towards income taxes and corporate taxes, to a tax structure which gets a significant amount of its revenues from consumer retail sales. They are, to some extent, doing something analogous to the creation of the VAT system, which exists in pretty much all other advanced economies apart from the United States. Now, what that means is that this is a very, very regressive change in the American tax system. The new taxes, which could be as high as $500–600 billion a year, 2.5% to 3% of GDP, will bear largely on the middle and lower middle income brackets of the American economy. The countervailing tax cuts from the extension of Trump's tax reforms and various other tax changes that the Congress will probably kick in, not early enough to prevent a recession, but maybe from 26 onwards, will be largely reducing taxes on the richest people in America. So I think what this will result in is an even bigger shift in the American tax structure, and therefore the distribution of income against the people who voted for Trump and in favor of the professional upper middle classes.
Can I throw a challenge to both of you, which is there an analogy here with Russia? Because I remember very well when the war broke out and these massive sanctions were announced on Russia, and there were many people in the commentariat who were like, oh, we're going to cut off Russia from the international trading systems, it's going to cripple the economy, the currency is going to collapse, blah, blah, blah. Very little of that happened. The sanctions are now broadly considered a failure, and Russia seems to have pivoted. It is analogous to America in that it's another vast country with its own resources. If autarky is possible, there are very few countries in the world that can do it, but Russia and the United States would be two examples. Do you think it's possible that America sort of goes in that direction, where it ceases to be the kind of economy it has been for recent decades, but moves into a more autarkic kind of economy?
Yes.
And maybe that's what Donald Trump wants.
Yes, I think so. And I think, what they are doing, the main effect of what they're doing, as I said, is a change in the tax structure, far bit more taxes on consumption and less taxes on incomes and corporate profits. And I think after a year or two, the economy will adjust to that. There'll be a recession, but there'll be a recovery in Europe from 26 onwards. And I think you're absolutely right. The American economy, both in terms of its natural resource endowments, but more importantly, in terms of its human capital and technology and so on, is easily capable of thriving, as a closed economy. It's already the world's most closed economy. It has the lowest share of imports to GDP of any major economy in the world. It will become even more closed. It'll do fine for many, many years, but over time, and this I think is a very, very slow process over decades and generations, I think it will lose its competitive edge and its technological leadership relative to the rest of the world, if the rest of the world play their cards right.
Wolfgang, what do you think of that concept?
I think your example of Russia is very good because it reminds us of the difficulty is forecasting certain economic shocks. Like we were wrong on the tariffs. The Western consensus view was completely wrong on the tariffs, on the sanctions, on the Russian sanctions. Sorry, we may be wrong on the tariffs too, because these are shocks beyond anything that we've ever modeled in the past. There may be all sorts of effects. For example, coming back to industry, if you have industry setting up, the effect of industry itself may be small, but as China and Germany have both discovered, any industrial company gives rise to a lot of sort of supplier networks, services companies. It gives rise to a whole ecosystem of people. So it's not just the companies we're talking about. So this might be one of these, what I would expect to be one of these sort of unforeseen effects that a reindustrialization could bring. Deindustrialization has gone far too strong in both the United States and the UK, and we've seen the political consequences of that, because industrial workers don't become bankers, just as coal miners don't become advertising agency employees. It's just there's certain they just stay where they are, and regions decline, and change their voting patterns, and this is what happened in the United States and in Europe. And what could happen if the reindustrialization is intelligent, and it won't be, the old jobs won't come back. Absolutely. Detroit will not be rebuilt I know not in the way it was in the 60s and 70s. But what could happen is Industry 4.0. This is the stuff that China does. And America is actually quite well equipped to this, with large data centers, artificial intelligence, in robotics, a completely new sort of generation of industry. And America could actually be at the forefront of this. I'm more open about the possibility that this might just...
And I should say, I've just come back from Washington and spent quite a lot of time with people who are sympathetic to the Trump policies. And what you describe is exactly what they are hoping. They have a very low opinion of commentariat class and economic orthodoxy. They expect shocks and they think there will be unforeseen benefits. And even if it's a rough ride, they prefer taking that gamble. Let me ask a final question to you both. Who do you think the winners will be from this new world order? Because if there's anyone who has lasted this long in our conversation and is still with us, they probably have an interest in financial markets, and maybe they're looking at their pension funds and they're thinking, oh, where should I put my money? At the moment, it doesn't seem very obvious who the winners are. Europe is down, Asia's down terribly, America's down. Even Rheinmetall, I looked at this morning, the German weapons manufacturer, opened 29% down this morning. So there's a big question of sort of where will the money go and who do you think might benefit from this? Anatole, let's start with you.
I think that the winners, I'm pretty clear on this. I think the winners from this, if they play their cards right, will be China and Germany, because they are the big economies that have the greatest potential to restructure themselves in order to be consumer-led, service-led economies instead of export-led economies. And there are lots of companies within those economies, those markets, that could benefit from that. And of course, if Germany makes that shift, that will also sort of create a real engine of growth for the European Union and, the European region as a whole. So that's if they play their cards right. If they play their cards wrongly, and this is why I think, for the last 48 or 96 hours, the markets have been so feverish, because we're really at a kind of pivot point. If the Germans and the Chinese do not do enough to support their economies in the face of this deflationary demand shock, then the winners in the short term will be in the United States, because, as you were saying in response to the last answer, the United States economy can adjust to what's happened. The main thing that's happened in the short term, the United States, is a big tax increase. Well, in the next 6 months, there'll be a huge tax cut to compensate for that. The timing may be such that it comes too late to prevent a recession. But by 26, I think you could easily imagine a strong recovery in the US if there are big tax cuts that basically give back to the economy the money that Trump is now taking away.
Just in time for the midterms, perhaps, Anatole.
Yep.
Wolfgang, who do you think the winners will be?
I think the winner will be Trump. I think we're very much in Anatole's second scenario here. I don't think the Europeans will rise to the occasions. I don't know anyone in Germany who even talks about what Anatole and I just talked about. There's not even a lone opposition politician who would say this. If they're on the right, they will want fiscal austerity. If they're on the left, they want tax increases. There's absolutely nobody, and they all want to retaliate. So there isn't really anybody, there isn't even a minority party for this. So I think the chances are that we will not rise to the occasion. And as we've seen with all the crises of the past, 2008 in particular, America recovers after a year or two, and the Europeans have a crisis that lasts like a decade. And I would expect this shock to have a very similar. It will be very bad for the German export industry. I think it will be very good for the United States in the long run. They have a lot of technical innovation. They can so there will be a big shifts. I agree also with what Anatole said on taxes. This is a big shift on taxes. And that will all happen, and there will also be unhappy people, and maybe Trump's supporters will pivot to another party at some point, and maybe he gets others. But I think the winners are more likely to be over there than over here.
And nobody mentioning the UK there, I noticed. So we'll continue to be the despondent outsiders, just observing all of this taking place. Wolfgang and Anatole, thank you so much for your time this morning.
Thanks.
Thank you.
Our thanks to Wolfgang Munchau and Anatole Kaletsky. This is obviously a very fast-moving story. What we're talking about now may be completely different in 3 hours or 10 hours or 3 days. But what is clear is that this shock is not just a temporary one. It is pointing to some major reordering of the world economy. And here at UnHerd, we're going to do our best to understand it as it takes place. So stay tuned. We'll be doing more follow-up interviews with other people who we think can bring some wisdom and some sanity to this rapidly unfolding situation. Thanks for tuning in. This was UnHerd.